All right, let's start this awesome show with actually talking about some leading indicators, Patrick. We got, by the way, for the whole show, we only have 3 topics, but we have 11 different charts we want to show. There's quite a bit of data happening. There's quite a few charts to dig into. And this show, compared to others, is going to be, I don't want to say less ranty, because with you, Patrick, it's always more ranty, but definitely we're going to dig into some charts for sure on this one, starting with this particular chart on the Business Outlook survey. This is for the first quarter of 2023. And this really just shows in terms of where things are heading. In terms of prices are coming down, credit is also coming down, sales are coming down, capacity is where capacity is, but investment and employment is up just marginally. But you can really see that trend, Patrick, how we really crested. We ramped up in 2021, peaked in 2022, and now we're on our way down. The question is it going to keep going in this direction, or are we going to start going back up? Time will tell.
Well, we have to unpack those charts just a little bit, because one of the things that have dropped, for example, what brings some of that down is I'm going to give you an example of some kind of deflationary things. Prices on televisions are down 80% from some of their highs. So when we break these charts down and we look at what's happening, there's growth and increases in some, but a real offsetting decrease in others. So you have to look at sectors within those charts. Here's the thing about it, is that from a business optimism point of view, this whole business survey that they did shows that businesses are a little nervous. Business confidence is also being soft. Borrowing costs are increasing. Labor still continues to be a bit of a challenge. And then some of their costs are escalating in behind the scenes. All to say this is that the trend isn't really, really bad, but it's certainly not overly optimistic. It's kind of really flat, which is kind of in line with what we see GDP doing over the course of the rest of the year.
One of the things you notice from this chart that really stands out to me is look at the orange section, which is capacity. Capacity is essentially all out of the system now. You saw a lot of capacity that was built up essentially in 2021, 2022. There's no more capacity left in the system according to this chart. And this is only one chart. But it's interesting, Patrick, because this is really what we're trying to bring to the show here is some components of leading indicators, trying to look into the future without necessarily just looking at the past and saying, where's this stuff heading? That's why we're showing this particular chart, which I think illustrates that really well. The other chart that I want to share, and then we can kind of bring them together, is these kind of concerns that the average business sort of, if you will, are concerned about. And there's some interesting things. Number one is cost pressures. If you look at this chart, cost pressures, in terms of the concern, which is the orange bar, 2023 Q1, they're a little bit more concerned about cost pressures this year. Not too much. Labor shortages are less of a concern right now than they were last year. If you also look at uncertainty's up this year compared to last year. Sales, again, are up this year compared to last year. Supply chain concerns are way down, so that's good. Supply chains are opening back up. But one of the things that we're seeing at the top of the concern is credit. People are concerned about credit, but it's less of a concern in the first quarter of 2023 than it was in the last quarter of 2022. And the reason for that is because interest rates have peaked in many people's minds. So credit is less of a concern. I'm curious, Patrick, regarding credit, how people are going to feel about it at the end of Q2, given the bank failures that happened throughout March.
Well, all indicators. So I look at this as a bit of a leading indicator for us. As investors, what are we trying to do? We're looking into the future. We're looking at the economy, where we think it's going. What's the impact on housing? Because if you listen to the narrative that's happening in the bearish Twittersphere, which is a really big component of what drives some of the headlines even, is we look into the future and it's all bad news. There's a bubble, it's this, it's that. Now people are really confused because there's multiple offers on really well-priced properties. There's not enough real estate. It's all to say this. Let's just narrow it down and say, where do we think the economy is going? And we look at leading indicators. And I think this business survey is one of those. The people that are in the trenches are not looking at it overly optimistic, but they're not ultimately really bearish either. So as long as business is happening, jobs are going to continue to happen, money's going to continue to flow into the system, all good news, positive news in the world of real estate.
Absolutely. And there's actually more positive news to come, which we'll talk about in the next segment of the show, where there's some very interesting trends that are happening for rental housing providers. And we'll be sharing some charts around there.
If you like what you learned here, go to the description below and subscribe for our free Insiders newsletter, where you can also stay up to date for our upcoming events and our courses.
If you want to see more stuff like this, click here. If you want to see the entire show, click there.